just got the Euro news just come out, so let's just watch that for a second to see if we've got anything that we could quickly look at. Okay, this is the Euro USD. All I'm looking at the moment is where this support and resistance here, just on the top here, is very common, and it's just milling around that at the moment. So I'm just going to wait for that to just really sort itself out. I've got to admit, I'm not a big fan of the Euro USD, but yeah, we'll see how it goes. Can everybody hear us? Yes, I was brought up on the Sunshine Coast in Caloundra. I hope to get up there one day again. These are Fibonacci charts, Fibonacci Trader. Okay, what I was looking at with the guys in my room, yeah, this is closed right where we wanted it to, the area we wanted to close. 146.83 is the target that we had. It's actually closed right on that again. We're looking at having a 15 pip stop above 146.99 and looking at trading it down. So just not a very big stop, and see if we could actually resume the downside. Keeping an eye at that we've got a lot of support around this congested area right here. So we'll keep an eye on that as we go through. This is a 34 EMA, this one here, so that could actually act as support as well. Fibonacci Trader, up in the top left-hand corner, you'll see the name of it. I don't know if you can read that. And this is just a template and that I've put on it for myself. Okay, let's have a look at today's topic is about support and resistance. And this is one of the lessons out of my course. They're just some of the lessons that are in it, and we're just going to go into lesson 3, which is support resistance and how I use them. Here we are. If you have any questions, please feel free to ask. Now, the first step to trading the Forex is to understand the several key chart analysis techniques, and that's basically like the foundations of building a building. You've got to put good foundations down to be able to build anything on top. And good foundations of charting is knowing your support, resistance, how to find them, the correct placements for trend lines, and just basically knowing the chart and just understanding how momentum and all that sort of things work. But support and resistance is probably one of your most paramount ones, because that way you know where basically the ball's going to bounce. Well, you know where it's got the possibility of bouncing. So in this lesson, we'll learn how to identify the support and resistance. But before we do any of that, we need to start with the basics and define how to identify the high or low on a chart. So we've got a group of candles here, and what we do is we find the absolute highest part of the candle, which I've got here as the H. If we've got 2 candles lower to the left and 2 candles lower to the right, then we know that that is a valid high. Exactly, and you can see here again, 2 lower candles to the right, 2 lower candles to the left. Now, the high points on the chart, you can see here, and I'll just make sure I'm not going ahead of you guys, because I've got the screen being projected on another computer. So here we are here. Here it is. 2 lower candles to the left, 2 lower candles to the right, and here we have it again. So these are denoting good solid highs. So there can be more than 3 closed candles. I like to just have a minimum of 2, but 3 to be on the safe side, especially when you're beginning and you're not very much, haven't had much time in actual trading yet. So to find the low point, it's exactly the opposite. We find the lowest part of a candle, 2 or 3 higher candles to the left, 2 or 3 higher candles to the right. The important part is just to find the extreme low. And here's the example here on the same chart. There's your lows. And of course, here are our highs that we just looked at. Now, an uptrend is the price movement of a currency pair when the overall direction is moving higher. More specifically, it's when each successive peak high and valley low is higher than the earlier trend, making higher highs and higher lows. Just simply explaining the chart, but here's your lows and here's your higher highs. So if you've got higher lows, higher highs, you know that you're easily in a trend going up. L1, L2, L3, and L4 as the lows, H3 as we go through. So if you do that, then you actually find where the trend is going, and then you start to look, when you open the charts up here, you can go, okay, well, if I get a pullback, I can expect it to probably come around this high here, which is now support. And if I start to get a bounce and a candle formation, or if your indicator says, right, it's ready to go back up, well, then you can trade safely or more safely in that direction of the trend if the trend is going to continue. Now, these higher highs and higher lows are also marking both resistance and support lines. So once you find these areas, just put a small horizontal line across them, and that will make it a lot more, stand out a lot more for you as well, once you find those 2 lower candles to the left and to the right. Depends, Arjun, it depends on basically what style of trading you're doing. I mean, if you're scalping, well, you'd probably need to go to a lower time frame. But generally what I look at is, first thing I do is look at my daily chart, and I find out where the highs and lows are on the daily chart, and I mark them on my 30-minute chart. I trade on a 30-minute 3-0. And I use the daily as the major support resistance for the day in that area. Some people use 4-hour charts, other people use 60-minute charts. But always go, when you're looking at them, don't go down to lower charts from if you're trading off a 15-minute chart, don't go down to a 5-minute chart and put your highs and lows there. Use either the chart that you're trading off, or go to a higher time frame and use those as well, because they're going to be much more pronounced when the price gets to those areas. Remind me to show you that in a minute on the chart. Actually, we'll do it now, otherwise I might forget. Let me bring up my my chart, and I'll find my daily. This is the GU there, and you can see here I've got horizontal red lines that are basically at prominent lows. And when I drew that, put that line there, coming right across, you can see that became a really good support resistance area. It became that again right here. And we're now challenging it today. That also became the monthly central pivot line, which is also very good support and resistance. Then what I do with this particular charting package, I right-click on the line, and then I could link it to any other chart that's the same currency pair. So then I go across to my main chart. Right, now as you can see on this chart, it's not on there. Let me just go to my working chart, and you can see, there you go, then you can see the red line is there. Now what I'll do is I'll just go back to my daily, I'll unlink it, go back to my working chart, and didn't do it, did it? Let me try it again. There you go, it's gone there now. So if you can do it off a higher time frame and link it across, do so, otherwise you're just going to have to do it manually. But the good part about it is, let's have a look at, just for example, this last couple of days, and I'll relink these lines to my working chart. There we go. And look where it's bounced. So you can see that that particular set of daily support resistance line, simply drawn from a daily chart, has been pretty accurate. Here we are. Here's another one from the daily chart, just below, and the market's just gone past it, come back up, retested, and retested right here again in today's Asian session, and then pushed off that. So this is a 30-minute chart, and I'm drawing my support resistance off for a daily chart. But you can do it off the 60-minute chart, as long as if you do it either on this particular time frame that you're actually trading with, or higher time frames. Does that make sense? So in an uptrend, the currency will need to battle and break through the high to make a new higher high. This is the only way to keep the trend going. Here we have, just horizontalize. I call that the battle area, or the war zone, because there's a lot of times it'll just come up to it, especially when there's been a fair drive to it, in like 40, 50, 60 pips or so. A lot of time the war zone will happen, and it'll just battle around. And in this case, it's come back down and retested this area. It hasn't come all the way down, but done a retest and then pushed back through the war zone. Again, here's the new war zone. Markets come up to it, just tested it, pulled up, pulled back, and through. And you'll be able to see that quite a bit. So some people use these war zones as breakout areas. Other people use them to say, okay, well, let's see if we get a pullback first and then a push through again. But just remember, present resistance can become future support, and vice versa. Now, downtrend is exactly the same, just obviously in the opposite direction. Find your highs, find your lows, and if you've got lower highs and lower lows, then you've established that the trend is in that direction. If you don't find higher highs and higher lows, then you're looking at sideways or chop, or then you'll be looking at other different types of patterns like pennants and wedges and things like that. So here's another example of this, basically like a staircase, where the market is just moving down in waves and stepping down each time. Again, throw just to help yourself if you're not familiar. Now, it's not even if you're not familiar. That's exactly why I do it on my 30-minute chart, pasting it from my daily. Is that, if you're looking at 3 or 4 different charts and the market's starting to move, you can forget where those support resistance lines are if you're taking them off another chart. That's why I paste them onto my working chart. That way I can't forget. It's right there in front of my eyes, and it'll remind me. Sometimes I actually put an alarm on them 10 pips before as well, a price alarm. And here we are again. Here is a good example of past support becomes future resistance. There's the low there. Draw a line straight across, and look at that now. falling down, new low. Markets come here, just paused here at the war zone, pushed through, come back up to the war zone, and then has just fallen through again. So it's really important that if you don't identify where your highs and lows are, how are you going to know where to start looking for a continuation of the trend, or to find the sweet spot, the best place to enter the market? There'll be times where I'll look at this and I'd say, okay, well, it's come back up to the war zone. Is it going to keep coming through? No, but it's given me now an evening star to come down. Now that evening star has been retested, so I have a candle formation that's also agreeing with pushing away from support and going with the trend. The open of this candle here would be my entry, and my stop would be just above this high here. So once you find where the support is, don't just willy-nilly just say, okay, well, it's coming up there, I'll just put an entry in now. Have a couple more reasons why you shouldn't. I always trade, if I've got 4 different reasons to get into a trade on my rules, then that makes my position a little bit more higher probability. So let's just start with a blank chart, mark in some current prices and support resistance area, and see how we go. So I'll just bring the charts back up again. I'll change the chart to a blank one. Now, this has been taken where I know there's some nice waving, and this is back in 2008 in December. So let's just get, we'll just make the lines white here on this particular chart. So there's a high. There's another high there. Another high there. Remember, we've got to have 2 candles to the left, or 3, or 2 or 3 candles to the right to give us a particular high. This one was the high at one stage, and then we got these nice tweezer tops here. Then what we need to do is find the lows. Well, this one's going to be really easy because look at this. This is a low here. So that was your support, and over here it's become resistance. Now, if you don't, just quickly, if you don't understand why we call them support and resistance, think of this one as the floor of your house, and when you walk on the floor, it supports your weight. If you think of this one as the ceiling, if you throw a ball to the ceiling, it'll find resistance and bounce back to you. So that's the easiest way to look at it. Support your weight when you're walking, and the top one is resistance against the ceiling. So we've got this happening here. We've got another low here. And you can also see, if we're traveling down, we did have a bit of a rest and a battle at the war zone here, and then punching straight through. So let's just now look at what we've got here. We'll punch the charts up. Why can support become resistance? It's just when the market's trending in a certain way, Jack, what will happen is, let me just grab a little circle. What will happen is the market's coming down, and once, whoops, okay, I've got an alarm going off on my GU. We'll have a look at that in a second. It's just crossing a trend line. Once the market feels that the price is getting too far down, or people are starting to take profit, that's where you start to get profit taking, and the price will come back up. Around about here, if we know that was, you can see where we've got resistance building up here and price building up, then we can say, right, somebody else will go, oh, I like the way that is there. This is now cheap to actually get in and go short with. So instead of buying it here at the shoulder of the trade, they're buying it back up towards the feet, getting the best possible price because they believe it will come down. Down here, more people that were in this leg will take some profit. Other people, they'll say, right, it's up near support here. I think I'll get in here. And that's why it's just a common prophecy sort of thing. It's like a self-fulfilling prophecy that once you just establish the trend and start looking at these support resistances, you can then say, okay, well, around here I'm going to start looking for my opportunity to enter at a better price to take it further down or take it up if it's an uptrend. And let's just roll this chart forward and have a look at it. Whoops. So it's come back up and met this support. It's punched through. We've got resistance up here. 3 to the left, 3 to the right. All right, that's for a beginner, that would be the minimum. But if you feel comfortable, 2 to the right and 2 to the left, or on any chart. Doesn't have to be just on the 30-minute chart. All right, let's have a look and just watch this current candle that I'm clicking through now. And let's just see if it gets very close to this. Now, this is at an area now where I would look at it possibly bouncing, and I'll tell you why. It's a Fibonacci area. If I pull my fibs from here to here, it's around about, yep, it's an 86% retracement. 786 and 86% retracements. When you're trending, this is where I really start to look for it to curl back or punch through. Let's see what it does. There we go. So it's just short of our resistance at a logical level, and you've got minor support in here, and we'll see what it does. Fred's saying sell. Now, interestingly enough, it's just come down to a daily support resistance line. I'll just blow this up a little bit further. There we go. And it's also come back to this battle zone, or the war zone, just over here. So it'll be interesting to see if it can get through it or bounce up. So if you're in after it bounced off the 8.6, which is another support area and resistance area, then you can bring your stop back up, and then you've got a break-even trade. Or what I like to do is, rather than do break-even, I like to have it break-even plus my spread. So if the spread was 2, might as well get that spread back. Let's see what we've got. We've got momentum dying. Back, it's holding off that battle zone. Come back up to the 786 here. That 78% is also held. I'm just keeping an eye on time, guys. 78's held again. So I'm not in anything at the moment. I'm just looking and just letting it prove itself. And here's where I start to look for momentum. Now, look where it stopped again, right on. Let me just get rid of this 618. It stopped again and closed right on the daily support resistance line that's from the daily chart. See how reliable those things are? And let's see what we've got. Now, we've still got lower highs, all right? We are starting to get a bit of a baseline here. But while we've got lower highs, we'll keep looking for a bearish signal. And there we go. Straight through. Look where this one has stopped. There's the next daily support resistance line from the daily chart, and the tail's just spiked down to it and pulled back. What time of the day is that? Okay, this is 2 hours before London Open. Now it's come back up and retested this war zone. All right, so there's the retest, this spike candle here, retesting the war zone right across this main low here. Now what I'm going to do is I'm going to flip these fibs. Let me get out of this one. I'm going to flip the fib this way, and I want to see where, there it is, there's fatigue starting to happen around the 786 and 86. So this is where I'd start to look either for a bounce and a rest to re-enter short, or I'd just be saying, okay, well, this is my target. Okay, straight down to the 86, it's really, really strong. Also on my system too, the double histogram gave me a short right here. See how it went from the long side to the short side? I've got both histograms on there. That also gave me a nice indication there was a lot more flow in the market to go through, or a lot more strength. Jen, yeah, sometimes it depends on your structure. What I like to look for is, I'm not going to try and pick highs and lows. I want to know where they are, but I want to try and get the middle third of the market, which is a lot safer. But it also depends on my stops and that as well. Tom, I think it is being recorded, yes. But in the meantime, because how I work my trading is mostly on momentum. Once I've found where my supports and resistances are, I want to see if momentum is pushing me away from them or into them. Once I've got that idea of that, then I will then trade in that direction. And normally I'll go for between 30 and 60 pips per move and then start scaling out. All right, so the 8.6 has been penetrated, and now what's it doing? It's pushed back off it. So there's your hidden support resistances as well. We saw it up here as a hidden one, and now the 8.6 and 7.86 again is becoming support here. So you can trade down to this, and you can say, okay, let me just get my measuring tool here. Let's say we got in right here. We went down to 78%. You're looking at 36 pips there. Go down to the 8.6, and you're looking at 49 pips on that just small position. Now it's it's done a pullback up to the 618, but more so, let me get rid of that 618. It's more so come back up and retested resistance. This daily support resistance line that we had already drawn in. So we know the market came down to it, went through, came to an 8.6, came back up. It's now retesting this area and now rejecting it. So now we're looking at, there's a nice follow through apparently that's got the potential. We've still got this new low here now to contend with. So we can see what the market does with that, because this is the new battle zone or the war zone. Now it's punched through it. And let me just raise my charts up, because there is another daily support resistance line just here. So let's see how the market rallies for that. And we've got another one just here as well. Okay, so that came down and tested that now. Let me just find out what level that is. That's 62.47, so we might as well say 62.50. This came down to 62.55, so within 5 pips of that. So if you're trading down to this, I used to say to my students, let's just do a 10 pip buffer. If it comes down within 10 pips of that, all right, then you've got the option whether obviously to take it off the market and cash it, or if it doesn't quite make it, but it's within the 10 pips, if it comes back 10 pips and you're up 60 pips, then lock it in and say, rightio, It's come back 20 pips from the daily support resistance line or the target. I'm not going to risk giving any more back. I'll take it off the board and then wait for a new entry. Okay, let's just chug along a bit further. All right, so the market's come back up to the war zone. It's now finding that war zone a little hard to handle. Now we just wait for it to work itself out. Okay, June, the best way to work out if it's going against you is when it breaks previous. Two things you can do. You got your trend lines coming through. So if it breaks a trend line on the way back, it could be preparing to reverse the trend or rest the trend. If it takes out previous highs and it's no longer making lower highs, it's just made a new higher high, that's when you can start to look at, well, maybe this trend is over. And then you wait for a new trend to evolve. All right, well, let's just finish this one little one, and we'll go to the GU and see what it's been doing. Now, there's a good chance right here that we could get basically not a double bottom, but this could be the retest for us to push back up. So what I'm going to be looking at now is, are we going to penetrate the daily support resistance line, or is this the bounce area? Now my momentum indicator is just flattening. Now it's starting to show me some depth. What time of day is this? Okay, it's about 3 hours before London. Still not in the market yet. Now let's see if it takes out the war zone. No, but now I do have a lower double histogram. Before I didn't. Now I have this one here. And for me, that'll be my trigger to short for about 30 pips. There we go. Or even short and scalp it to the support resistance line. Okay, let me just go to the GU on the working chart. Okay. This 6200 on here was our target yesterday. 6225 was the target that we had the day before. These are on a spreadsheet that I calculate on and give it to the guys in the trading room. So what have we got here? We've got a 200 EMA here being rejected. You can see how it's been rejected a few times here. I call these the EMA kisses. It's come up, rejected it, pulled back below them. Nice trade down. All right. Now this is actually doing the same. It's just rejected and pulling down. So if we go to the daily chart, let's refresh our memory what the daily chart was giving us. We are below 6238, which is the monthly pivot line. So while we're staying below that after we've actually breached out and come down to it, we can start to look short for the interim until we get down to 6124. Sorry, 6166. We're at 87 at the moment. When it gets down to 6166, we've got to start just being a little bit more cautious. So going back up to the working chart at the moment. Yeah, it's got a bit of, it's picking up, but there's the daily support resistance line. Here's the retest of it for today. Yeah, 6166. So being Friday, we've had a nice big run down on most of these markets. Just be careful that today doesn't end up becoming a profit-taking day. Yes, yes, you can, Arnoon. There's my pivot lines here. I was just about, that's the next stage of the lesson. All right, so let me go back to that other chart. There we go. I'll take out this these fibs. I'll shorten these up. So you've got several different types of support resistance, and let me put the pivot lines in. There we go. And here we are here. So once we start, the dark blue ones are the central pivot line. And then I've just got light greys for the R1s, R2, S1, S2s. I want to know where the central one is every day, because that's the one I'm going to actually set my compass off for the main support resistances as well as my dailies. Bill, I don't, to be honest, I don't know, because on this chart here, it's just a standard indicator, this one. It's just one of their standard indicators, so I'm not sure. When these actually start is 10 a.m. my time, which is the start of the Asian session. So that's when they start printing. There is other, in this package, there are other pivots that you can actually change the time manually into how you want it as well. But it doesn't really matter that much, because once it's like anything. It's like if you're so comfortable with using an EMA or an MA or any sort of indicator that you can see the patterns that you feel work for you, even pivots, it can be a floor pivot from the stock exchange. It can be the GMT you just mentioned. As long as you know and see the regular patterns that you can trade off, then that's what the main thing is. You've got to develop yourself as your own personality as a trader. There's no good trying to be a clone of somebody else, because and if you could be a clone of somebody else, everybody making money because they just copy experts that are doing it all the time. But where the challenge comes is everybody's emotions are slightly different. Everybody's brains are wired differently, so you start to see things a little bit differently as well. This is why everybody's got different entries and different exits and things like that. Yes, and John, good point. I mostly look at the previous day. All right, so if you have a look here, there's the previous daily central pivot line. The market's come up through it overnight. This is the Asian session. It hasn't been able to get back up, and now it's gone below here. So yes, I do look at what the previous day is. If I've got two pivot lines that are very, very close together, I'll watch them more closely, especially if they're the central pivot lines for the day. Let's see if I can find one. Okay, here it is here. So you've got two central pivot lines close by. And when you've got these sort of things, and look at how this has just gone chop. When they start to separate, let me just drag the charts across. When you start seeing these pivot lines that were close together separating, that's when you can start to look for the market starting to get more violent. Bill, sorry, I don't know Sam Seedens, so I can't answer that for you, I'm sorry. But I do pay a lot of attention to support resistance and then look at where momentum is flowing from it. So if you think of it like a river, and treat your support and resistance like the banks of the river, and the water is just coming in and pushing away. It's finding the least path of resistance. And when the water flows, and once it's broken through some sort of the least path of resistance, then you can look at that direction. Okay, let's just go back to only got a few minutes left. Let's go to the current market at the moment. Let's have a quick look. Euro's trying to push off. Have a look at the euro. There was that support resistance that we put in with green line. Let's wait for the chart to catch up. There we go. I was wanting to see if that's going to be able to get above it. Now look at it. It's now retested it. Nice little tails here. those nice little tails here off that common area of support resistance, I'm talking about the pricing now, is giving me confidence that there's not much interest in the short side at this particular stage. But look at this, we got yesterday's central daily support resistance line here. We've got a daily support resistance up here as well. So if you're looking at this, you probably wouldn't be looking for a lot of pips. You'd just be looking for maybe scalping 15, 20 pips or so. Okay, let's have a quick look at the GU. All right, the GU's come down, and see how we got a flat area of price here. All right, it's come down and closed at 61.88. This next one closed at 61.87. So that sort of area here is what this is testing at the moment, and we haven't closed below the 34 EMA. We've still got an open candle. We've still got about 16, 17 minutes of this candle. It's also testing this 62.11 pivot line. So this really hasn't decided which way it wants to go yet. This is just a test. We want to make sure that we respect these tests and then let it show us what it's testing and what the results are at the end of the candle. One more example. Remember I talked about earlier that I was wanting to respect this congestion here. That was the problem area. If I draw this oval right across, look where the tail, that's just been testing. This low across here, 146.14. This low here, 146.21, within that 10 pip tolerance. Arjuna, it's just up to you. Whatever your chart you feel really comfortable with trading, whether it's a 15 or 30 or 1 hour chart, don't flip around to a lot of the other different time frames. Just get used to that one and really get to know its personality. Go to the bigger ones for to really establish the trend, and then come back to your trigger chart and just work with that really consistently, and then you're going to start to really get to know. And if you're a beginner, don't look at any more than 2 currency pairs. Just stick with 2 currency pairs. All I have on my screen is 4. That's all. And I very rarely trade the euro, but I just look at that to see what it's doing with the others. But the GJ and the GU are the 2 that I do about 80% of my trading on. And I really get to understand the personality of these 2. Okay, guys, sorry, but I'm out of time today. But let me just come down here. Now, I'm from pipsandtips.com. My partner, Mihai, and myself, we've got our trading room there, and we've also got full courses available. So if you'd like to come along to pipsandtips.com, and there's a trial there for $10, come and have a look at what we do. Come and see us trading live in the room, and we'd love to see you there. Thank you very much, guys. If you've got any questions, please email me at renshi@pipsandtips.com, and happy to answer them if I can. Thanks, Maud.